good morning, and I apologize. A thousand apologies. Can you guys hear me? God, that was horrible. This building, they're doing construction next door, and every once in a while I lose internet, and I apologize for that. I was on with the company just freaking out. Sorry about that, guys. All right, where are we at here? Okay, so overnight inventory is short. Oh, hey, Doc, how are you? You'll excuse me, my gotta go clean up all these references here. There we go. That's a little better. Okay. And if you're just joining us, folks, I apologize for the lateness. Had some internet issues. So let's do a quick rundown here. Our overnight inventory is probably about 80-90% short. Most of the trading is underneath the previous day's close. And it looks like we are stopping right at the bottom of yesterday's cost basis. So we've sold the market down. We're letting those shorts who got trapped last night or yesterday going into the close cover because they high closed it. And let's see if we can break this 62.89 and get down into this area here and try for yesterday's low. Now, that's just me looking at this thing for the very first time. Let's go take a look at the 1 minute. So, you wondering how we do the balance zones? We'll do them with you right now. And what we do is, here's a perfect example. So when a market sells off and starts to stabilize and go sideways, that's exactly what we're looking for balance. So here, for example, do you notice that the market will use my lateness to benefit you guys. Do you see how these highs line up? And do you see how these lows line up here? And do you notice the back and forth? That's the balance that I'm always looking at. Does that kind of make sense? So we'll kind of go like this. Right? And that's exactly what we're looking for. We're looking for that two-sided trade where it goes back and forth like that. Now this is a smaller, this is only, gosh, it's barely 2 points, right? So we'll just take that and we'll double it to the downside. And we double it to the upside. And that's really basically how I get the zones. Then the next step is just basically sitting and watching and seeing if they work. And what's going on is that two-sided trade. When a market falls, the wholesale traders will sit and they'll be both sides of this balance zone. So they'll stop selling here, and this is where they initiate selling. That gives us that back and forth that we're looking for. And you'll notice that the overnight point of control is down here because this is where they'll start to accumulate that position. This is 2 times profit, and this is, if that position goes bad, this is the 2 times discount zone. Get all my stops in. You see how it's bouncing back and forth between 89 and 91 and 3/4? Now, this is where I learned this from market profile people. They said, find the balance zone and then double it to find the target. And that's all they said. And over the years, I started doing it with daily charts, and I found the targets were pretty amazing. Then what I did was a friend of mine was having trouble because he was over trading, so we tried doing it on a 5-minute chart. And it worked amazingly well. You know, the targeting and the levels and things like that. So we just, I started using it on smaller and smaller time frames to help people figure out where they need to put their trades. So the trade that we like to do is the look below and fail. So if it looks below and fails, it should rotate back to the top. If it looks above and fails, it should rotate back to the bottom. And this way you have a place to put your buy order or your sell order, depending if you're shorting or you're buying, and a place to put your stop. Right? And it's worked like a damn so far over the years. And that's basically how I find my levels. So we'll watch and see. Now it should rotate back up. So that's what, if you guys ever wonder what creates chop, this is what creates chop. Chop is created when the business slows down and those wholesalers are what we call, they're on both sides, so it's two-sided trade. And the reason this happens is there's not enough order flow or flow of customers to cause any kind of a trend up or down. Now, the bigger the balance zone, the better the trades, right? If it's, I really like to get one that's, you know, I'd say 3 to 5 points. Here we're working with barely 2 points, so it's not, not that great. But for illustration purposes, it's working, and the market's kind of slowing down. And you notice that market profile people call this value area low. Yesterday's where the blue stuff is. And that is the bottom of yesterday's cost basis. So yesterday's inventory is priced through the whole range. 70% of yesterday's inventory is priced above 62.90, all the way up to 63.12. That's what market profile tells us. It tells us really quickly where the inventory is priced. Okay, now let's see if the market takes out that overnight low and takes out this stop. Your next target, if you're short, right? If you're going to short, you'd put your short in here, you'd put your stop above that candle, and you'd be looking for 86.25 as your first target. Let me just go get my other software open. Remember, so your short say 88.5, right? Your stop's going to be at the top of that candle. Now say you got stopped out, right? That tells you that they don't have to sell any lower than that level. You get stopped out all the time, right? Now, how do you use that information, right? Well, you can use that information to go long because now it's done a look below and fail, right? Now, if it's really choppy, you'll get stopped out a bunch here, up and down. But say if you buy 89, put a stop at 88.75, right? Sorry, you buy like 89.75, put a stop at 88.75, right? You know there's going to be a seller at 90, and you know there's going to be a seller up here at 91.25, right? So you just throw your sell orders out and see if they get taken. It's pretty simple, right? The look below and fail is a very simple trade. It's based on, are the sell orders under 89 done? If they are, the market will rotate higher, right? You know there's going to be a seller here, and you know there's going to be a seller there. It's a very simple trade based on the mechanics of the market. So, you're out one at 90 and a half. Your next offer is, say, at 91, right? So the first trade I was a short and I scratched on, and that tells you the direction that you should be trading, right? Instead of just shorting it and shorting it and shorting it. And if it can't take out my 91 offer, you move it down to 90 and 3/4 and see if they take you at 90 and 3/4, right? It's really simple. And then I'm out at 90 and 3/4, flat. So it was actually kind of nice because I got stopped out here, right? I was short, had my stop here, got stopped out, didn't waste a lot of money, turned around, was able to go long, and took advantage of that. Now that's the method in which we trade. You see how it makes common sense, right? So if the sell orders are completed under 89, why would you be short under 89? Do you guys understand the reasoning, the logic, the simplicity? That's the trade, right? You don't Yeah, you don't have to really worry about what the market makers are doing, right? You just want to keep it simple, right? You just want to keep it really simple, right? The sell orders that took the market under 89 are completed, right? Once those sell orders are completed, the market will rotate back up, right? So you go long, put a stop underneath that level, and sell into strength, right? Right? I find a lot of people are really, I don't know, um, I don't know how to say this. All you need to know are the simple mechanics, you know, and then you could have a clear head when you're trading. Now, if it was choppy and I went long and I got stopped out, then I'd know, oh, the market's telling me maybe I shouldn't be trading, right? So the first trade you get stopped out, the second trade you go in the other direction. And if I'd gotten stopped out there, then I'd take a step back. Does that make sense? Summer, do you see how, like, your thoughts aren't, you know, they're not bad or anything like that, but you see how you want to kind of keep things simple, right? So it allows you to concentrate and trade. So you're not worrying about other people's positions and things like that. You're just worried about your business, right? So the first trade tells you that you're wrong. The second trade shows you that the direction has changed. And that's how you use these balance zones. It's very simple, right? It's very, 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 very simple. Now, inventory of the overnight session itself is short. So say my internet was working and I had built a little position between 90 and 91. We're going to take that position now and we're going to try and sell it from say 92 to 94, and if we're lucky we can be 96, 97 for it, right? Yeah, Summer, there's nothing wrong with your thoughts, but just for the purposes of retail trading, you just want to keep it simple so you can be, you know, you always want your mind sort of relaxed and clear when you're retail trading because the more information that we're looking at, the harder it is to execute, you know. VWAP's at 96.31. Thanks, Jam. What are you doing up? I had nightmares from that stuff you sent me. Oh my God. I'm never looking at the news again. Oh my God. I am never watching the news again. That's it. Do I wait for a few points before executing? I try and execute as quickly as possible. Um, and if it's at the edge, I don't know how to pronounce your name, Wort. Um, you know, that trade that I took long is based on the fact that the sell nobody needs to sell under 89, and that's really it. Now sometimes I won't be quick, right? And a few points is to wait in the balance zone is only a couple of points, so there wasn't really much meat on the bone in that balance zone. So it's more a question of ticks. Oh, there's some disturbing news going around that you guys are all talking about, and I don't watch news, but one of the guys in our room will send me this this stuff. I happened to look at it and I was like, oh, okay, that's the last time I look at stuff like that. Oh, crazy, crazy stuff. Yeah, you don't have a TV. It's easier. Oh, all right. So now we're above that 92 area, right? So we're gonna try and distribute, right? We're gonna take this and we're gonna try and sell it up here. Now, this is gonna tell us if there's any decent buying. If we can stay above 92, 91 and 3/4, that means the market will be bid here and the offer will start to lift. Okay? If we run out of buyers, the market will come back into the cost basis that wholesale has paid for it, right? So this tells you right away, right? If you want to buy this area, you kind of sit and watch, and if it's a slow flow of customers coming in, what will happen is it'll kind of chop around this level, and the candles will get really small. That means there's like a slow flow of customers. Make sense? See how we came down, hit it? So again, if you're long, right? If you're buying this and you know that there's sellers here, you know the next level that you get to is going to be around 94 and 1/4 and they're going to be sellers there. There's a stop there, right? That's what that is. So what that means for you is it might chop around here before it does this. So that's how you can tell from the candles how well your trade's going to do. See how it's kind of slowing down? So right now the market's distributing the product they bought from 89 to 91 and three quarter, but there's not a lot of buyers. So there's not a lot of movement. See how the candles are small and they're just kind of chopping around back and forth? So you know you have a seller here. Yeah, right? I mean, if you are a large trader and you're long, say, 500 contracts here, you can still make a good buck by selling them up here because every tick is $12.50, right? So you don't need much. But for a retail trader, right, who's looking for this, there's no follow through buying. So the market's telling us right now, just from the size of the candles, that business is slow and maybe take a step back. Now, I'm usually done at this hour. If you guys want, because I was late, I can stay on a little longer. Might be a little slower, but now you're seeing it's coming down under 91 and three quarters. And it'll now it's this is going to be tough to trade because if you go short, as soon as the market finds a bid, it's going to lift. Do you kind of see how you can tell by how the candles are the difference in business between here and here? And that's really, really difficult to see when you first start trading. So you know when to trade and when not to trade. Globex is always the see yesterday's RTH. A lot of people got short, right? Because they weren't expecting the market to rip higher. Do you notice here? Here, let me. This is actually a good question. So if everybody was long, it'd be great. You could maybe get rid of some inventory. But if the market got really short into the close, this allows people who got short down here to come in and do some covering. Trading trading all-time highs is very difficult. This is what we call an inventory adjustment. The market got too long yesterday, and this allows shorts to come in and cover. That's why you'll notice the point of control is down here, right? So it's allowing traders who were short yesterday in this area to do some covering, right? That's why we are down here. So why are we not flushing down yet, Laura? What do you need to flush down? Anyone? It's a good question she's asking. So, Meteor, the Globex is a great time if you're offside in the previous session to try and balance your books, right? It's okay. So it's up 30% since the bottom, but is that meaningful? What I'm trying to do, Laura, is I'm trying to show you what's important. Why you're not flushing down yet is because no one has to sell at lower prices yet. And the painful grind up is very indicative of a market that has multiple short positions in it. That is the type of price action that we get. This is the problem with selling short and expecting a market to crack. The US markets are not structured to sell off for multiple periods of time. And I know that sounds ridiculously weird, but if you look at how the US market is put together, look at the foundations of it, right? There is no competitive selling. Large investors, say I own Apple at, or what's Microsoft at? Did it hit 500 yesterday? I didn't look. Say I own Microsoft at $100 a share, and it's trading at 500, right? If I'm a wealthy individual, I'm not going to sell that stock and take profit. I will take a loan out against it. My investment bank will happily give me a loan against my Microsoft. That way I don't have to sell it and incur capital gains. And that way I get to write the margin off the interest off the loan off my taxes. Right? That's why people don't sell stock anymore. Asset managers don't sell stock because they get paid on assets under management. So if the assets under management keep going up, their management fees keep going up. Everything is built for higher prices, right? We don't have any competition among sellers yet. When we do, we'll get a quick flush, like we did in the overnight. There's a quick flush, and then all of a sudden it hits a wall, you'll notice. You'll notice this, right? The reason is we've got short positions that are built into the market that are holding it up. And there's no reason to sell it. There's no financial reason to sell the market if you're a large investor, right? You're just booking your gains every month. Your assets are being priced higher and higher and higher, right? The margin, right, the collateral on whatever debt you've got is being priced higher and higher and higher. There's, yeah. I don't know who that is, but it's crazy. Now, Meteor, don't worry about the TPO POC and the VPOC. Don't spend too much time on that. It takes time to gather volume and it takes time to sell volume. That's why sometimes they're not at the same level. Rich, we teach that in our room all the time. And if you watch the video, what you want to do, if you're going long, learn how to scalp. Learn how to scalp long. Long, stop, sell. Right? You want to go long when the selling is over. It's not easy to figure it out. That's why at the Trading Syndicate, we're teaching all the time. It's a process. Good stuff, Rich. Nice. Yeah, see, like Raj was watching a video yesterday where there was an early Tesla investor and he paid $20 for the stock. Yeah, of course they're not going to sell it, right? Once you get a basic understanding of how this whole thing is put together, now you're still going to get stopped out in trading. Retail trading is the hardest job in finance, right? And you're going to get stopped out like I did on the first trade I took, that short. Don't get upset when you get stopped out. Take a step and learn how to use that information to help you either trade in the right way or stop trading. Like say if I was trading here and I tried a long and got stopped out, tried a short and got stopped out, I would stop trading. And here's a very, very little good rule of thumb. Do you see how this looks like a barcode on a box of cereal? Barcode charts like that are very difficult to trade, and it means that the business is slow. So right now, maybe not the best time for a retail trader. You want this kind of action or this. But when it goes into these barcodes, and it's hard sometimes at night to get it right. That's why you got to spend the screen time and sit and do that. And of course, if you have any questions, always feel free to DM me. I apologize for the lateness of this stream. I have a good chat with my internet provider. Wish they'd give us some warning before they cut the power to the building. It's crazy. Oh, trying to trade gold? Uh, you know what? I've always been taught to sell inventory into a breakout, Rich. So I'm not a breakout trader. Like, see, it is breaking out now, but it's so hard to figure out when it's going to break out. And how much extension of the breakout is it going to break out and go or break out and fail, right? You could try it, but I tend to only trade when, see, it's got a little bit of legs to it. It's taken out the 62.94s. But now let's see if it stops when it comes back to 93 and a half. So if I was long at 92, 92 and a half, I would have sold it already at 94. Right? I've never traded gold. I've run gold stocks. You know, we've mined for gold in Alaska, but I've never actually traded gold futures, so I really don't know at all how they work. I've only always traded ES in a retail capacity and just stuck to ES. So do you see how it broke out for like a minute, and now we're kind of back under 93 half, and it's chopping around? So it might do this up here now. Now I'm sure breakout trading is probably better when there's more order flow, when there's more people in the market, when it's a faster market. I'm sure, people who trade breakouts have better success then. That's pretty much it. Any questions, folks, before I jump off? No? Okay. Well, once again, I apologize for being late, and we will see you at 9 a.m. Eastern Time for our next session. This is the tradingsyndicate.org, and I'm JJ. Thank you so much. Does ES respect trend lines? I don't know. I know a lot of people use them, Rich. I do not. So I haven't done the work. If I haven't done the work, I can't answer the question. Thanks, everyone. Thanks, Summer. We'll see you guys in a few hours. Bye for now.